Today on the Ask BP podcast, we're talking about how can I invest in real estate if I just got turned down by a bank? Stay tuned.
You're listening to another BiggerPockets Ask BP podcast, where you'll hear short, direct answers to your biggest real estate questions. Submit your question today on Facebook, Twitter, or the BiggerPockets forums by using hashtag AskBP. And don't forget to pick up your copy of the Ultimate Beginner's Guide to Real Estate Investing and other great content when you sign up for your free account at BiggerPockets.com. With that, let's get to the show.
What is going on, everyone? This is Brandon, and you are listening to the Ask BP podcast. I'm excited today to bring you another question about financing real estate. I talk a lot about this lately, maybe because it's like my passion, maybe because I wrote a book on it. I don't know, whatever reason. I just like talking about real estate financing, creative strategies. And today's question comes from Sarah via email. And Sarah asks, Brandon, I just got turned down by a bank. How can I still invest in real estate? All right, Sarah, let me try to answer your question in a few different ways because, you could find another way to invest, or maybe you can make the bank thing actually work for you. So let me talk about a few of those options. First of all, let me talk about applying for a loan from a bank. A bank loan, trying to get approved, is a lot like a combination lock. Like old-fashioned high school lockers, you're turning, or the idea of like a PIN code, right? You're gonna, beep, 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 beep. And if you get the right combination, the safe opens and you take all the jewels and you run. And so that's kind of what a bank loan is. It's a combination. And every button's got to be pressed in the right order, and the right buttons have to be pressed. Of course, we're not talking about buttons. We're talking about qualification standards with the mortgage or with the loan. You see, here's a dirty little secret that nobody wants you to know. Banks want to lend money. For some reason, we all think that banks are like hoarding their money and they're like, fine, I'll give you some. But no, they desperately want to lend you money. That is why they advertise on TV and on billboards and on magazines. Banks want to lend money. That is the only way they survive. They want you to borrow money from them. So how do you do that? You have to crack the code. So what is the code? Well, there's a number of things that are involved. First of all, I'll say one big part of the code is going to be your credit score. How's your credit score look? Another big part of the code is your income. What is your income like? How much money do you actually make? Now, closely related to that is going to be your debt to income. How much debt do you have, and how much is your debt payment every month compared to the income you make? Another one is going to be the loan to value. The loan to value is how much you're trying to borrow compared to how much the loan, or how much you're trying to borrow compared to what the property is actually worth. And so if you're trying to borrow $90,000 and the property is worth $100,000, you're borrowing a 90% loan to value. Now, what if the bank only allowed an 80% loan to value loan? Well, you didn't hit that combination right, and that is why you didn't get the loan. And so these are all parts of the combination you have to do. And there's numerous different codes you got to enter in, and every bank has a little bit different combination. So the first thing I would say to you, Sarah, is go talk to the bank and find out exactly why you didn't get approved. Ask them very deliberately and very carefully, go over each point. Was my income not good enough? Was my debt too high? Was my credit score too low? Was the property in the wrong location? Do you not lend in this location? Find out exactly what it is that's wrong with your income and then push forward from there. You see, here's an interesting thing about loans. The funny thing about loans is this. When you get a banker who is not very good, they're going to turn you down a lot more. Good bankers can get people approved a lot more than bad bankers because it's all about creativity on the part of the banker. Yeah, maybe your credit score was too low, but maybe it was only too low by 5 points. The banker could say, hey, if you just pay this one thing down, it'll raise your credit score up enough for us to do the loan. Great. Maybe your debt to income was too high. They could be like, hey, this one credit card has kind of a high payment, pay this off, and then we can do the deal. So a good banker will help you navigate and be able to unlock the code so they can lend you money so you can get the property. So again, those are just some of the ways that you can navigate through that bank financing issue to try to find a loan that will work for you. Secondly, some banks you're not going to hit the combination right. You just won't be able to uncrack their safe. So instead, what you got to do is you can go try other banks. If you really are intent on using a bank financing for a loan, you can go try other banks. Try 1, 2, 3, 4, 10, 15. You'll eventually hopefully get a yes. As long as you keep asking, what am I doing wrong? What am I not hitting? What am I not hitting? Find out what code or what digit you're not hitting right on the code until you get somebody to say yes. Now, there are a whole lot of other strategies that you can use to invest in real estate without using banks. There's a lot of them. In fact, most strategies out there don't involve banks. I mean, like the major one does, but there's dozens of other strategies that have nothing to do with banks. For example, you could use existing equity in your property. Now, you may have to get a home equity loan and a line of credit for that, which may involve a bank, obviously, but it could be done without getting a mortgage on the property itself. You could also get a partner to come in and either finance the entire deal or finance part of the deal. Maybe they've got good credit and good income, and maybe they can qualify for the mortgage. You never know. You could also, lease options. You could do a lease option on a property. You could do seller financing on a property. You could maybe even get into wholesaling if you wanted to make some more cash using wholesaling to be able to generate cash to buy properties. There's a few other techniques you can use, and that just barely touches on the different possibilities you have to be able to invest in real estate with creativity. So remember, don't let a bank's no stop you. Push through and build a cool future for yourself without banks. You don't need them. So with that, let's get out of here. Today's success quote comes from Dale Carnegie, who said, "People rarely succeed unless they have fun in what they're doing." So ask yourself that question today. Are you having fun? Do you enjoy real estate? Do you like this game? If not, there's a lot of ways you can make money in this world. Do what you love doing. I love real estate. I love making Ask BP videos. I'm doing what I love. I hope you are too. So let's get out of here. Remember, in pursuit of your goals, do not just learn. Do not just listen. Do not just read. Do not just watch, but take action. For the Ask BP podcast, my name is Brandon, signing off. Sit. Good boy. Good boy. He's learning.
You've just heard another episode of the BiggerPockets Ask BP podcast. Submit your question today on Facebook, Twitter, or the BiggerPockets forum by using hashtag AskBP. And for more incredible real estate investing tools and education, including a free download of our book, The Ultimate Beginner's Guide to Real Estate Investing, head over to BiggerPockets.com and sign up for your free account today. We'll see you on the next show.